Welcome to Build Wealth with Araceli. And today I have Brad Buchamp. He is a mortgage broker, and we actually had a question in regards to some of how Canadians get approved in the US. How can they get a mortgage? Brad, welcome. Please, can you tell us who you are for those who don't know you? And then I'm going to ask you a little bit of questions about how Canadians get approved in the US.
Hi, Araceli. It's a pleasure being with you today. Today I'm in Toronto, Ontario, and I am a dual citizen, a U.S. and Canadian citizen, and I live in Palm Beach, Florida, and Toronto. And I've been a mortgage broker for 5 years in the state of Florida and Texas, and I'm here to help your people and your group hopefully invest with you and themselves in the United States. And I believe I can get financing for their investment properties.
Yeah, so one of the things that you did is you put a presentation together. Let me pull it up. Okay, so this is what we're going to be talking about today, just financing in the US for Canadians. So because we are both Canadians, and in my coaching program, a lot of people have been asking, well, how do I get started? And there's many ways, and we're going to talk about it today a little bit. What are the options for Canadians? So here is a bit about you. So can you tell us more about it?
Okay, this is just a quick little to tell you a little bit about myself like that. But I took that picture and which was sort of cool in at the Palm Beach Home Show I worked last year.
Nice.
And that's James Harris, which is in the TV program. I'm not sure whether you investors ever watch these programs, but this is $1 Million Listings in Los Angeles. This is James
cool.
in that program. And yeah, I met him at the home show, so I took that picture. So that was sort of cool thing that I have.
That's very cool.
Yeah, I live in like I said in the Toronto area, and I'm helping immigration attorneys, different companies and clients, realtors, investors, and real estate coaches like yourself and their clients obtain financing in the United States. I can do it remotely. I have loan origination software that I use that I log into with a VPN. And I'm doing it, helping them with the financing, whether it be multifamily or single family or condos. So I can help with all of those different investments.
Well, financing for Canadians in Florida, it's been there for a while. But in other states, like in Ohio, I've been investing there for 10 years and we didn't have that available for a long time. So that's what we're going to be talking about today. So one of the questions that I had is saying, somebody said to me that there is Canadian banks lending in the US for US property. And I just want to clarify this because BMO, RBC, and TD, they have arms in the States, in the US, right? So they have links with different banks, but they are not Canadian banks. So they will approve you. And I think Brad is going to go over what the requirements are, but the actual product is held in their US arm. So that would be a US product for a US property. Okay, so tell us about it, Brad. If a Canadian wants to go to any of these banks and get approved for a US property, what do they have to do?
These banks, these Canadian banks do have banks that they own, which is with the same namesake or slightly different, but they are entities in the United States. They are separate, but with the same family like that. And you Canadians can get financing. You can do applications in Canada. Actually, no, you have to call the U.S. entity. They refer you to a cross-border number and you call them, they set it up. And they also, the thing is, a lot of people don't realize, yes, you can get a mortgage with some of these big 5 banks in Canada, but they do look at all of your liabilities and your assets in both countries. If you do financing in the US, they do not look at your assets and liabilities
Okay, so I want to state with this first, Brad, so we can move on to the next one. So just to clarify, if you are applying in any of these Canadian banks, they're going to refer you to their US arm, which it has a similar name, so you can go through the application. And all of that application requires all of these documents that are here. You're going to have to do your notice of assessment, all your stuff, your insurance, anything that you have as you were applying for a mortgage in Canada, but you're not. And the terms, if you can see, they're very similar to a Canadian mortgage. You're going to have a 3, 5, 7, and 10-year terms, which we have usually in Canada. In all of the other things, the amortization would be about 30 years. You can apply for any state. Everything else you can do in Canada because obviously they have a relationship with a Canadian bank. But the extent of what you need is a lot. It's like applying for another mortgage within Canada. Is that correct, Brad?
Yeah, it's absolutely like applying for a mortgage in Canada. And as we know, everybody out there, our audience out there, is that a lot of people are not, they have money saved in the bank. They want to invest in the US, but they maybe don't have the income to support investments. They want to buy rental investments to help them support it. It's just really restrictive for them when it comes to the documentation. The stress test that Canada has, which is basically 4 times income. You have to show. It's just really, really
Wow.
restrictive when it comes to buying and trying to add or gain wealth.
Yeah. So that is an option. So if you are qualifying and everything, this is an option for Canadians to start buying in the US. However, this is not the only option. There are other products that you can apply through Brad in the US, and that's what we're going to talk about now. So this is some of the other products that are in the US that you can access to a mortgage broker like Brad that could be more aligned if you don't have a lot of the documentation that a Canadian bank requires. Can you tell us more about these products, Brad?
Yeah, there's a lot more lenders. There's a lot of wholesale lenders. There's credit unions. There's banks in the US that do have incentive products. They have investor products for foreign nationals like Canadians, like ourselves.
Mhm.
And you can apply for those. They're doing these loans every week like that. And they're not very restrictive compared to going to a Canadian bank. So
Mhm.
I would encourage you, whether it be with me or anybody else, that there is products out there. You just have to educate yourself. Like I said, thousands of lenders. So if we go over some of the advantages for this slide, some of the advantages to get U.S. financing and not Canadian financing is that there is no limitation to how many investment properties you can buy. As we're in Canada, I have friends of mine that own multiple properties and they're
Yeah.
maxed. They can't buy any more Canadian properties. So there's no limitations to properties. You don't need any US credit score. You don't need any proof of income. And people will go, what do you mean you don't need proof of income? In the United States, you do not. For
Mhm.
these specific special products, it goes by the value of the property and the rental income that the property brings in. So that property is pre-qualifying the mortgage for you.
Mhm.
What else
That
is
is
there?
actually, you're bringing a really good point. And a lot of people think, especially right now, I invest in Ohio. And a lot of investors are really rushing to Ohio because of the prices that are a lot lower than in Ontario, Canada. However, because they don't understand the area, some people think that because they're buying at a lower price, they're going to be able to get approved. But as we talked before, you cannot get a mortgage unless you get an appraisal on the property. And that's what's so important, to know the areas, uh, where you're buying, at what price you're buying, and if you are doing any type of rehab, how much money you're going to be putting in to make sure that you're covered. So can you tell us a little bit more about the appraisal and all of those kind of things that need to be met?
I mean, everybody has great ideas about investing in the United States, but You have to be really careful. You have to be very prudent. You have to do a lot of research, like Araceli and the area that she's concentrating on, like in Cleveland, Ohio, for example. And I think I know Palm Beach County because I have 2 or 3 properties there myself really carefully. But you gotta keep in mind there's insurance issues. You need insurance for properties that you're buying. You need the taxes. You need the current tax records from the county tax collector of what the taxes are, what they may be in the future. You have to look at you have to figure out what the interest rates, get some idea of interest rate from me, so we can plug in some numbers. On my website, I do have a mortgage calculator on there for the US that you can put some numbers in yourself like that, but we really don't know all the finished numbers. Lots of people ask me, well, what are the numbers? What are the numbers? We don't know the numbers until we know the actual numbers, if that makes sense.
Yeah.
Appraisal comes back, that is the number of what the bank is going to lend you on. We might think it's worth 500,000, but when the independent appraisal comes back, they say it's only worth 450. Well, that changes your LTV, that changes the amount of money that you can borrow, changes all of those things. So, it's a process when you're buying and you're investing. And as you go along, there's steps along the process. But at the end, when you do get the financing from myself, we have to give your closing disclosure. And the closing disclosure, once I sign off on it and you do, it cannot change by law. It's stuck in there. Even if the numbers change, actually the mortgage originator, like myself, is responsible for the number for the after we give you the closing disclosure, we're responsible for the numbers. They cannot go up for the client or the end user.
Yeah.
So it's just, you go along the process, you really know the numbers as you're going through the 30-day closing cycle, and you can see what all the numbers are, and you can always reevaluate it or change different companies. You can't change your taxes, but you can go to different insurance companies. We can restructure the loan. We can go to a 40-year interest only loan. So there is ways to make sure that we can close the property.
Okay. Yeah, the reason that I'm bringing this up, Brad, is because people that don't know the area as well, and it could be anywhere, not only for myself, I emphasize it very much because in Cleveland, we have many areas that can vary. And sometimes you are 2 streets away and this property is not going to appraise to you think that it's going another property appraise 2 blocks from where you are. And believe me, like I've tried to figure this out, and there's only certain things that experience will give you. So that's why it's so important to make sure that you understand the area. And I'm sure there is the same in Florida, the same in Texas. All of these are certain pockets that you need to be aware of and that you need to select carefully, because if the appraisal doesn't come at what you think it is, then you're going to be in for that money if you want to get a loan on it. So that's the only thing that I warn people about, to be sure that they understand what is it that they are purchasing, no matter what the price is. It could be inexpensive according to what we're used to here in Canada, but that doesn't mean it's the right price. Yeah. That's what I wanted to get at. So, okay, so let's continue to go on to the next slide. And so you wanted to explain what is a foreign national loan, right?
Yeah, like a foreign national loan, which we don't have that terminology in Canada, but a foreign national loan, right, is anybody who's a non-resident or non-citizen of the US and has no ties is considered a foreign national, right? So it's an opportunity for any overseas investor to invest in the United States. So lenders in the US have this product, so foreigners can invest in the US, and that helps them.
That's awesome. And this is actually one of the things that I really like about the US and about investing in the US. As long as you know that the good property meets the requirements, you're basically good to go and you're able to get a loan. Okay, so what is the profile for the borrower?
So we talked about this before, but it's like I said, someone who's does not use their primary residence is not in the United States. It's just for investment purposes. They're looking for investors to invest in the US. That's why they offer these products. Must have a valid passport or visa. You have to show that you're from another country. You have to a US credit report, because a lot of foreigners don't have a US credit report, but that's not necessarily. And you don't need a social security number or an ITIN number. And an ITIN number is a tax ID number. If you're filing, if you have investments or you're residing there or you have a visa or something like that, a lot of people would get a tax ID number, which you can get from your accountant like that, but a lot of people don't have. And if you do, there's even products for special loan products just for ITIN numbers. So they really are trying to encourage and lend money to people that are interested in investing in the United States.
Yeah, absolutely. And the reason that they give you a number is that you can pay your taxes. Doesn't matter if you are a citizen or anything, but you need to pay taxes.
Yeah, they want the taxes for sure.
Now, this is a product that I really want you to go into detail, because this is probably the one that most Canadians want to know about, which is the DSCR loan, or debt service coverage loan.
To simplify, a debt service coverage loan is you're gonna pick out a property, an investment property, which you think is a good investment. You're gonna put 25 or 30% down, because the maximum LTV at the moment for DSCR loan for foreign nationals is 75%. So you need at least 25% down. You're going to get appraised. The property value, you're going to really do two appraisals: the value of the property, and they're going to do a rental analysis on the property, the same company, and they're going to and then they're going to do the ratios, and they're going to look at the mortgage, depending on your mortgage rate, and does it cover the principal and interest and taxes and insurance on that property. And if it does, on a 1-to-1 ratio, rent coming in against the debt and the mortgage, if it at least just covers it, even by $1, they'll give you the financing to purchase the property.
Okay, well, this sounds very interesting. And just to make sure that everybody understand, we're talking about the gross rental amount. So that's the amount that you're charging your tenants. So if the house is rented for $1,000, that means that those $1,000 are going to cover the mortgage. What else is the taxes, the
Taxes and
insurance?
Yeah. Because Canadians, we don't do this in Canada so much, because you can pay everything separately.
Yeah.
But in the US, when you get a mortgage, the mortgage company or the service company, because sometimes there's third-party service company that services that after the mortgage closes, some of the mortgages are sold off to third-party service company, and they service the mortgage. They collect the mortgage payments. They're all combined in the United States, not like Canada.
Yeah.
So the rent, the insurance, and the taxes are all collected as a single payment. And the service company or the bank, whoever holds your mortgage, pays off the taxes when they come due to the county tax collector and the insurance company. So you don't have to do anything. They're doing it all for you.
Okay, so that's great. And so here is the income requirements.
For income requirements, they do need, if you're self-employed in Canada, you just need a lot of times lenders will just need a CPA letter saying that from your CPA, whoever is doing your taxes, or your whoever doing your taxes, saying Brad Beauchamp makes $150,000 a year, and I've been doing his taxes for a couple of years. As long as that's signed by his stamp, that's acceptable. And year to date, it's made so much income, or this last year made X amount of dollars. That's acceptable. A letter from your accountant, or an employee letter saying that Brad Beauchamp has worked at ABC Steel Company for 30 years and his current salary is $150,000 a year. That's acceptable also, income letter. And then the appraisal, which we already talked about, the debt versus the market. Okay,
so the requirements is quite substantially less than if you apply with a Canadian mortgage, a Canadian company.
Yeah.
That will give you.
sorry, in Canada, they want your dog and and cat
Your dog, your cat, your firstborn, and your secondborn.
and many documents. So
Yeah. Okay. Well, let's not go there. Let's try to get it simple, right? So, okay. So, what is this asset verification?
so for assets, they generally need just your bank statements for the last 2 months. And
So you will still, okay, so I just want to make sure that I understand. This is for the DSCR loan, right? You still have to provide some documentation, not as extensive, but you still have to provide some documentation.
well, you just have to show you have an account that's in good standing and there's money going in and out of the account. That's really just to show that you have a current bank account and it's only asking, as you can see, for 2 months, as where you'd have to show for a whole year in Canada. Or your tax returns, your all this stuff, just to show you have a bank account and you have a banking relationship. So it's
Yeah,
not that
and the bank has to be in the US.
no, well, this is in the US or Canada. You can use either
Oh,
bank. I've had,
okay.
that actually people use either or.
Oh,
Uh,
perfect.
if your currency, and for asset verification, you're going to say, okay, Brad is going to call you, for example, say, okay, where are we getting the money from the deposits? That's the thing. So I have to verify as a licensed loan officer that they have money in the bank from somewhere. It can be from a Canadian HELOC, and the HELOC is a line of credit on your principal residence in Canada, as people know. Or it can be in a Canadian currency, or it can be US currency, or just euros, where's the money coming from, right? Is it, or I have to verify that they have money in the bank and they have enough money to close the property. For that,
Okay.
number three would be at some point in time, you're gonna have to open a US bank account and you're gonna have to put the deposit in the US bank account, and eventually that will be transferred to the title company. And in some lenders, you can transfer the money directly to the title company and they will hold it in trust before the closing also.
Yeah. So yeah, that's what I wanted to get at, because when you're applying, it's okay to show it in a Canadian bank, but eventually if you're approved, you still need to have a US bank account. May as well just open it right from the beginning, put the money there. It's just a lot easier to do it in one transaction. So, because you're going to need it. US banks are not allowed to take payments from a Canadian bank. So that's why you need that US account. Okay, so now how about this one here for
Sorry,
the
people
programs?
know that you have to have a US bank account because the lenders wants to know when we fund this loan and when we close the loan, what bank account are we using? Right? So the money is going to go in, like the money's and the rents are going to go into this account and we're going to take it out of the account. So that has to be established. That's all. Program terms, minimum payment, we discussed it. It's like minimum, the maximum right now is 25%, but it could be depending on the appraisal, it could be 27% you need. You might need 31%. So that's to be determined as you're doing all the figures, but it's maximum 75% LTV or 25% down.
Okay.
For fixed, these are the current, program terms, as we talked about. They generally, for long term, they have a 30-year fixed rate, and the term, which a lot of people don't realize, is actually 30 years. As we're in Canada, the term is 5 years. So that's an advantage if you have some low rates. Currently, I have a 30-year fixed mortgage now in Florida at 2.88%.
That's super.
Yeah, so I'm in good shape there. Just in Canada is a disaster. They have fixed ARMs, which are short-term loans for 3, 5, and 7-year ARMs. Adjustable rate mortgage is an ARM. And they also have products that are interest only, where you're just paying interest only. You might want to do that just for a short-term period like that to help you get your principal amount down or get your cash flow going. So it gives you multiple options. The prepayment penalties are generally, you can either do 1, 3, or 5 years. And that means generally you can pay 20% of the loan value down every year. Here, I think in Canada, it's only 10 or 15%. But we don't need a credit score. A few lenders will will accept a Canadian credit score. So if you have a high credit score in Canada and you have no credit score in the US, some lenders will let you use your Canadian score and some lenders will not. Depends on the
Okay.
lender.
That it's good to know. So that's why it's so important that you contact Brad or whoever is helping you with this mortgage, so you understand, because if you're able to use your Canadian credit, you might get a better product.
Yes, because if they can use your Canadian credit and you have like a high credit score, that'll be advantageous to it. You will get a lower rate, because if generally on the lenders that I've been dealing with, and I have about 150 of them, they automatically go to a 660 score.
Okay, so in summary, the reason that we're putting this together is so you can have a distinction between how to apply for a mortgage for a US property with the Canadian bank that has a link with some across the board banks that they can help you get it. That's one way. Another way is to go through a mortgage broker like Brad and find out what your specific situation is. And you might be able to qualify from some other products that are in the US, depending on the type of property, what you want to accomplish, your credit score that may or may not be used. And the only way that you can find out is just by talking to Brad and saying, this is my specific situation. Remember, this presentation is very general, so you can have an idea what are the options, but it's never, one size fits all. So you need to be talking to someone like Brad so he can go over your particular situation and what you want to accomplish, what is the size of the loan, all of the little details. Because remember, from state to state, it's a little bit different, and he might be able to have different lenders in different states that might fit your situation better. Is that correct, Brad? So
Yes, yeah. Just tell me the situation so I can figure out where I'm going to go and how I can package it together, and I can speak to the lenders on your behalf to see if there's some special programs, or there is some discounted programs. There's lenders that have specials on certain months, believe it or not. Say we have a special, if you can afford a national loan this month, I've seen that before, we'll give you 50 basis points off and stuff like that. So please call me. I look forward to speaking to everybody.
exactly. So that's the best thing. Remember, all of these presentations are very general in general terms of what it could be. But if there's something that you have or require any clarification that maybe we didn't speak about and that from other sources, make sure that you either call me or call Brad to have an exact answer to your specific question. Because remember, some people may qualify with the product, but because it's a different story, like they're trying to do something totally different, and maybe they're in a different state. So don't go by what people tell you, just go to the source, which is with a mortgage broker. We're hoping that you can contact Brad, but if you already have or are working with a mortgage broker, then ask all this specific questions and see if they can find you the right product for you. So do you have any final remarks, Brad?
It's just been a pleasure here. We're going to continue on to help your clients and your group and your investors, to educating them on how we can help them.
Exactly. So please make sure that you comment, and if there is anything specific that you want to know that we didn't discuss today, please let us know, because Brad and I are putting these videos to make sure that you understand and you have the right answer to make the right decision when you're investing in the US.
Great. Thank you, everybody. Wonderful to see you today, and looking forward to our next session.
Yeah. All right. Thank you, Brad. And we'll speak to you soon.
Thank you. Bye now.
Bye.
Have a great day.